Is this really the end for crypto? It's been pretty rough. Stocks have been outperforming. People are saying, well, 4-year cycle, baby, top's already in. Bear market here starting now. And in that case, what the heck happened, man? Where was a blow off top or even a major risk season? If you're bullish, then a downtrend now might sound unlikely when BTC has been over 100K for over the last 4 months and looks at home with that 6-figure price tag. But then, when compared to equities, BTC's recent performance has been rather lackluster as it's been ranging sideways. Nvidia has been crushing us as a $5 trillion market cap stock, man. It's crazy. The altcoin landscape is looking very far from the insane froth of 2021. Most altcoins are way off their previous all-time highs. Many are never going back there again. So is there any hope left? Well, the answer to what's in store for altcoins might be found not by obsessing over the crypto charts, but actually by taking a look somewhere else. Low cap stocks. And as we'll see, there appears to be a lot of long-term correlation at play here. And if trends continue to move in this direction, well, then we may be looking at an incoming impulse of risk-taking in the altcoin markets. So to see why that's the case, we need to focus, of course, on the Russell 2000. We talked about this recently, but it's worth reiterating and going in a bit deeper on this topic. Well, the S&P 500 contains all those large cap blue chip stocks that represent the core of the US market. The NASDAQ 100 is the tech-heavy stuff. The Russell 2000 attracts a large number of smaller cap companies. Things are worth, $1 billion a piece or whatever. And it can be used as a gauge for risk appetite in the market and the health of the broader economy, because small caps are much more sensitive to credit conditions, to rates, and to growth trends, which is the exact same stuff that is sensitive with altcoins. So when investors expect easier liquidity or rate cuts, the Russell reacts, it breaks out, and it can signal that risk on sentiment is back across the markets. And yes, that can include the cryptocurrency markets. And so guess what's happening right now? The Russell 2000 is breaking out. In fact, here on the chart, you can see that it's been up only since early April, with the index ripping since then from 1,930 currently to just around 2,500. That rally put it at a new all-time high. And if this breakout can continue the momentum and we don't just get cut here, then we could be looking at a prolonged extension from here. But do not forget, the Russell 2000 is sensitive to rates. It's sensitive to credit. So where it goes next depends on the macro environment. And this week, of course, we at first got a nice boost. The Fed made a 25 basis point rate cut. Good. Muy bien, right? Made clear that quantitative tightening, or them running off their balance sheet, is going to end on December 1st. That's a month away. That's real good for markets. But then Jerome Powell's post-meeting comments were not so clear about where we're heading next, especially when he said that a rate cut in December is not a foregone conclusion. Only assist speaks in absolutes, Jerome Powell anyway. But when we've also got splits within the Fed, Powell himself highlighted strongly differing views. And there are two dissenting views this week, one towards no cuts and one towards a 50 basis point cut, which is a very unusual situation for all the Fed board members to be talking like that. By the way, my guess is the guy who's putting out the 50 basis point cut recommendations, he's gunning for a job for the next Fed chair in May when Jerome Powell gets replaced. But that's a different story for a different day. On the positive side, Jerome Powell directly stated the current market is not the same as the dot-com bubble, as highly valued companies now actually have real earnings and working business models and a source of growth. Additionally, matching up with a positive outlook, the ISM business cycle appears set for upwards momentum. None of this shit happens overnight. That's the problem. I know everyone's losing their effing minds sitting around with the cryptocurrency markets right now. I get it. But look at the big picture, okay? So with the ISM set for upwards momentum, they can take the Russell 2000 with it. So what the hell does all that mean for your dog coins and all your other great altcoins that we have? Something to be aware of is that there are some key correlations at play. So get a handle on that. And let's take a look at the Russell 2000 alongside the others, as all the coins outside the top 10. Before we get into that, guys, listen up to this. This is a crazy deal, an absolute no-brainer. Femex, one of the most secure exchanges in crypto. OG Exchange, I've literally been trading over there for years. They are literally giving out crazy money right now if you sign up and start a new account. There's a link right down below here. You deposit $5,000, you get $500 cash back. You put in $10,000, you get $1,000 cash back. You put in $20,000, you go big. they're going to give you $1,600 cash back money, plus up to $20K in trading bonuses on top of that. This offer is very limited time, so hit the link down below, go claim it before the offer expires. Now, let's turn to this others chart. The others chart shows the total cryptocurrency market cap excluding the top 10 coins. You can see that a similar pattern plays out on the two charts. Small cap stocks and small cap altcoins with price action rallying and slumping at similar times. Although altcoins are kind of lagging right now. As you've probably noticed, it's been an absolutely brutal, rough ride for anybody who dared to believe in something in the altcoin market. With the exception of maybe 10 coins, everything's been slaughtered. But there's a key difference here. While they both rip upwards together in prime macroeconomic conditions, when liquidity tightens, it's crypto that takes the bigger hit. So you get steeper peaks and troughs on the others chart, or the Russell shows the same overall trajectory, but with less volatility, shallower dips during the bear markets, right? And if we also check against Ethereum, it's basically the same story. Ups and downs at the same times, depending, of course, on liquidity conditions. But Ethereum is way more volatile with much deeper drawdowns when the Fed is tightening. And again, the end to Fed tightening is coming in a month's time. This is a major regime change over at the Fed. So the big question right now is whether or not history is going to, well, it doesn't repeat, but let's say it's going to rhyme adequately enough that we're going to get adequate risk environments happening in the altcoin market. When the Russell 2000 broke out above previous highs in November 2020, it then went on to rally hard until March 2021, about a 6-month rally. Consolidated there and finally put in a final leg up in November of that year before entering a bear market. So basically had a 12-month period where that Russell did really good. Does that all sound familiar? It should, because crypto small caps were following along for the ride. Although when the Russell consolidated in range, crypto basically absolutely went nuclear and crashed disgustingly. More volatility. That's what we know, right? Both stocks and crypto experienced immense tailwinds at that time. And the US, in fact, the whole world, was printing money like it was shit-faced drunk. The markets were juiced to the max. And while we have very loose financial conditions right now, it ain't like that, man. So we got an extreme display of what risk on really means and of the similarities, at least in terms of price action, between the small cap equity market fund and the small cap shitcoin market. So if the macro holds up from here, which we don't have any indication that it won't. Most things seem to be pointing in the direction that it will hold up from here. Russell is breaking out, and with a US admin that wants markets pumping as we head towards the midterms next year, then small cap stocks could be in for a major rally, which is in of itself an opportunity considering how bad altcoins have been. There's been some great runners in the stock market, looking like the altcoin market from 2021, putting crypto altcoins absolutely to shame in many cases. So don't be afraid to buy stocks, guys. But if altcoins continue the historical correlation, they can also rip. And when they do rip, they're going to rip higher and put any gains in the stock market to shame. That being said, don't forget crypto is kind of heavily saturated. There are now just a truckload more coins than there used to be. So you still need to be selective. In fact, I think you need to be more selective than ever before. I keep saying it, but there's probably about 100 investable assets, maybe a few hundred speculative assets, and that's it. So look for the coins that have ETF flows to boost inflows, find solid products that actually generate revenue, maintain attention, share revenue, do buybacks, all that kind of stuff. By the way, subscribe to our awesome free newsletter, link down below so you can keep up to date with all of the latest about altcoins, ETH, BTC, stocks, stock reports, trade updates, and much more. It's free, link down below. Look, here's the point. Crypto can pump hard when the Russell 2000 rallies, but you still need to do your homework and make sure you're holding the right coins, okay? You cannot come in here with rose-tinted glasses thinking that you're going to do okay. Okay, you have to be very precise with the things that you do and the risks that you take in this wild market. You can be rewarded very well if you do. You can also lose all your money. Thanks for watching.